Now, to be a successful trader, there's one thing that you have to master, and this is knowing where price is going to go. Price is either going upwards, sideways, or it's going downwards. But you want to be on the right side as often as possible. Mastering this one factor is how I was able to withdraw over 100K last year from trading a personal account. This is essential because sometimes you even want to be right when you're wrong. You want to be going in the right direction of the market, even if the trade you took is a bad trade. This is the secret. This is what's going to give you that edge up from wherever you are that you're currently stuck. This is what you need to master so you can actually increase your profit factor. So today we're going to take a page from my scalping program, and I'm going to talk about market structure and how I'm able to be on the correct side of the market majority of the time. As boring as it sounds, you do have to know this, and this might be the reason to why you are still not profitable. So make sure you get your pen and paper. Let's dive into the charts. Okay, so when I trade, the first thing I usually want to do is have a look at the higher time frame. In the past, I didn't really used to do this, but over time, as the market continues to change, you realize that you now need to adapt and add more things to basically have an edge. Yes, so now depending on the time frame I'm trading, I will add a higher time frame to kind of help to solidify looking at the direction and the market is going. So in this case, my entry is probably going to be on a 5 minute. However, I'm looking at the 1 hour to kind of see what the 1 hour is doing. Overall, looking at the charts right now, so this will be on like April the 2nd. And I'm looking to trade New York session. But I'm looking at the market overall at this time, which is currently at 12 p.m. You will see that generally just looking at this market, price has been very bullish, right? Since Friday, since Thursday, price has been pushing upwards the entire time. And now we have a sudden drop. In this case, we will have a change of character right here. So I would want to mark up my change of character. Because this is the high time frame, you don't necessarily need a change of character and a break of structure for confirmation that, okay, price has changed direction. Having a strong move to the downside like this on the hourly is already confirmation that there has been some correction. How long this correction is going to hold for, we don't know. Overall, price is still bullish. However, right now, as of right now, price is definitely bearish as of right now because this move is just too strong to the downside. So what I want to see is a continuation. I want to see price do this and continue dropping, which would be fantastic. That just solidifies my bias of like price is going to continue to go downwards. I don't necessarily have to go to the daily time frame and then the 4 hour and then the 1 hour and then continue this way just to know the direction, because for me that tends to add more complexity. That makes me have too many decisions to make, because now I don't know if, you know, the daily is saying a buy and the hourly is saying sell. It's just going to add confusion. So you want to keep this simple. To know what direction is going, you want to have a simple system that allows you to determine this. Once you start to have too many, you'll just get confused and you're no longer trading with confidence because you just have too many opinions. In the situation, I'm looking for shorts. And then I could go to the 15 minute just to further confirm this. And you can see on the 15 minute price is definitely forming, you know, change of character, and then would have a break of structure right here. So now on the 5 where I'm looking for my entry, this is important. As of this price action right here, price is really not doing much, right? We've pushed up, we didn't break any highs, we didn't break this high right here. We're sort of just consolidating. But after the consolidation for hours, all the way from London session all the way to New York, we finally swept these lows. So these lows have been swept. We finally broke out of something and we closed. It's very important that we close. When I determine structure, I need closures, not just wicks, because wicks means there is a lack of follow through. But when price closes, it means that buyers or sellers tested that price and they accepted that price. So in this case, we had a closure below this low. I trade supply and demand. If you do want to see more in-depth videos on supply and demand, I've made many videos on that. Just check out the channel, type in supply and demand, you'll find many of them. But in this case, this is a supply. This is a very good supply because we not only broke these lows, but fair value gap is directly attached to the zone, meaning that as soon as we had this little push to the upside, price immediately dumped. A bunch of sellers jumped into this market. So this is a strong zone. Now I'm just waiting patiently for price to go back up there. That's all I'm doing, just waiting very patiently. I'm entering this trade right here. Though we are talking about market structure, I'm just going to show you kind of a little bit of what I would do. I'm entering this trade right here, waiting for my entry confirmation, and I'm going for a 1 hour. In this case, you can see we hit the 1 hour and then eventually price retrace. So if I was going for 1 to 2, this would have been break even because I would have set my stop loss at break even at 1 hour. But if you are going for 1 to 2 and you're being more aggressive without any break evens, then in this case, I guess you could have also hit that. Overall, when it comes to market structure, this is what I mean by getting it correct from the top, and you can see how you can even grab a lot more because you're entering this from the beginning, right? The change of character just happened on the 1 hours and we're still entering quite early. So price might continue to dump, but as for me, would have taken our profit right here at 1 hour, and that is it. Now, the benefit of me even going for 1 hour is because this allows me to be right when I'm wrong. Price sometimes will give you a one-to-one, even when you're wrong about the direction, which is very fantastic. This is how I'm able to maintain a good win rate and maintain having a good psychology because I'm winning often. Now, one-to-one is not for everybody. However, it works best for me, and it works very, very well with my market structure playbook because I can be right even when I'm wrong. Let me show you another example. All right, so this next example is literally the day before. So the day before this trade I just showed you guys, you can see right now, the day before, price has been pushing upwards. There's no reason for me to be looking for shorts right now because price has not given any confirmation on the hourly that we are looking for shorts. So I am not even thinking about selling. It will be very unwise to sell in this situation right here. So all I am doing is two things. I'm waiting for buys on a lower time frame, whatever time frame you're using. If you go down to the 15-minute, you're still taking buys. Like, this is a very, very clear market. I'll show you guys another example of a market that might be harder to read, but in this situation, this is a very clean market. There's no ifs or buts about it. So in this case, I'm going down to the 5-minute and I'm looking for my setup on the 5-minute. If you trade supply and demand, then you look for supply and demand. If you trade in invalid fair value gap, you look for that. But whatever the case is, you now find your setup because you've determined the direction price is going. It's not too complicated to determine this. You just need to look for areas that price has swept, areas that price has closed in, and areas of consolidation. If you're not too sure, another thing you can look for is where has there been some kind of support and resistance. This, I don't actively think about this too much, but it can help when you have a tough market to read. In this case, I can see on the 5-minute, for example, that price has struggled to break these lows many times, right? Price has tapped in here, done it again, done it again, done it again. So we keep tapping on this low. So clearly price keeps failing to break this area right here. Once you have that and you're seeing that price is breaking highs like this, it's just another confirmation that price wants to keep going in that direction. So once you have this, as well as looking at the 1 hour, now you have two reasons. And then if you go down to the 15 as well, you see even more reasons to why price is going upwards. Once you've determined your direction, you need to stick to that bias. This is why I'm saying that you don't want to look at too many time frame, because another time frame can now be telling you to look for short and you're just going to get confused. So right now I'm sticking with buys, and all I'm looking for is buys until I have another reason to look for a sell. Now the benefit of trading something like the 5-minute or going for your entry on the 5-minute is easier. It's easier because price usually would not drastically change its direction within the session, right? I'm trading New York session just for 3 hours, 2 to 3 hours. In that time, there isn't going to be crazy movements that's going to be extremely confusing. If you're trading something like the 1-minute, you can have a bullish bias, then bearish, then bullish multiple times within one session, and that's why it's going to be extremely difficult. Yes, the 1-minute can cook. It is nice to trade. You can get high RRs. However, do you understand the difficulty that comes with that? So if you're a beginner, I would not recommend touching anything less than the 5-minute whilst you're still learning. It's just going to make your journey a lot harder. But in this case, we can see a clean break of structure right here. I'm just waiting patiently for price to come back to this supply. Price does come back to the supply. I take my entry, and this is a trade I actually took, I'm guessing, on the 1st of April. So eventually, bam, price hits my 1R, and that's all she wrote. And if you wanted to take more in this case, you could have got 1 to 2 as well, and price didn't come back to break even. So in this case, you can see that this is a money trade that you're going to take any day, anytime. Now we're going to look at a third example of a market that's a lot harder to read. But if you're finding any value, be sure to like the video and subscribe. We're very, very close to 250k. Once we hit 250k subs, it's going to be a massive celebration. So if you haven't subscribed, do so now. I'll give you 2 seconds. 1, 2. All right, let's get back to the third example. Okay, so for the third example, we are looking at this market right here. You can see on the 1 hour for several hours, price has just been moving sideways. So you look at this right now, price has been dropping for a long time, then price pushed up, consolidated for a very long time. We haven't really broken any structures, and then price eventually breaks this high and then consolidates for a long time again. So I guess naturally you would assume price would just do the same thing again, right? Like consolidate and then push up again. But that can be tricky because overall we are still in a downtrend. This could just be a consolidation. We have gaps right here, and then price can continue to the downside, and that's going to be tricky. So because of this, it can be confusing because this is a very long time of price just moving sideways. Price has been moving sideways literally since 12 a.m. all the way to 1 p.m. It's just gone sideways. So in this case, what do you do? So I'm going to move down to my 5 minute anyway and just see what price is saying on the lower time frame. Sometimes you can get clarity from the lower time frame because price is showing you what's about to happen that might not have happened yet on the hourly. So in this case, I'm looking at the lower time frame, and what can I see? I can see that price has failed to break these lows for some time. Price also is holding here, and whilst that's happening, we have actually broken this high. So in theory, what I would want is for me to be extremely confident. I would want price to break this high again and then retrace to this zone right here. That would be the most ideal case. But as of right now, I'm not fully confident, right? I wouldn't be fully confident in this setup, not at all. But in situations like this, what's the best thing to do? Now, ideally, you can stay out of the market completely, or you still go for kind of the best case scenario with what you got, right? You have a bad hand, however, you can do the best you can with the hand that you have. Overall, I'm still feeling that price is going to go upwards based on how price is going, based on what I can see on the general trend, right? Price has pushed upwards and then consolidated. So that alone, yes, I'll be feeling more bullish than bearish. It's about picking the sides. I'm definitely not selling because I've had there's no reason for me to feel like selling. Going back to the higher time frame, because of the most recent price action of us breaking these high, again, I'll be looking for buyers. So when market is tough, what you want to do is kind of look at the most recent price action. That's kind of what you have to go off. So on the 1 hour, that's the most recent price action. On the 5 minute, again, we broke these highs, the most recent. So in this case, what I did on this day was that I decided to go for a buy. So I took a buy, a quick 1-to-1, and then you can see price melted straight back down. So this is what I mean by in tough market structures where it's pretty tough, going for a small risk reward like this is fantastic because I can quickly scalp and just take my 1 hour and bounce just before it gets messy. So that's what I'll do when market is a bit difficult to read. There is many more examples and I've gone into many more scenarios in my scalping program. The link will be in the description if you do want to get that to learn more. So this is a perfect example, and this is probably one of the examples that's making you guys to lose, because when you have a tough market like this, you just take a rubbish trade and you keep doing this over and over, and every single loss that you take is significantly affecting your rate at being profitable because it is costing you. Every loss is costing you 1% every single time. So this is holding you back. If you want me to go through more examples with you, you can sign up for a 1-to-1 so I can actually work with you personally. The link will be at the top link of the description. But here's what I want you to do now. I want you to now go on your charts when you have time, look through all your previous trades and ask yourself, was the market direction clear or was it not clear? Is there something else I could have done better? And apply it to these examples I've shown you so far in this video. Once you've done that, you should start to see exactly why some of your trades lost and what you could have done better. I hope the video was useful. Remember to subscribe for more, and I'll see you guys in the next one. Peace.